The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
So as we mentioned, U.S. Treasury Secretary Janet Yellen saying a digital dollar could become a trusted money comparable to physical cash. Speaking at an American University event, Yellen addressed CBDCs, stablecoins, and regulations in her first speech on digital assets. We have a clip. Let's play it.
In other words, whenever possible, regulation should be tech neutral. For example, consumers, investors, and businesses should be protected from fraud and from misleading statements, regardless of whether assets are stored on a balance sheet or they're stored on a distributed ledger. Similarly, firms that hold customer assets, they should be required to ensure those assets aren't lost, stolen, or used without the customer's permission. And taxpayers should receive the same type of tax reporting on digital asset transactions that they receive on transactions in stocks and bonds. That way they'll have the information they need to report their income to the IRS. Under the executive order, we will work to make sure that consumers, investors, and businesses do have adequate protections from fraud and theft, privacy and data breaches, and unfair and abusive practices.
All right, joining us now is Chen Arad, Chief Operating Officer at Solidus Labs, which is leading a coalition on crypto market integrity. Welcome, Chen. Thanks for joining us. So I just wanted to get your impressions on Janet Yellen's first speech.
Well, first of all, Christine, thanks for having me. I'm a huge fan. Thanks for pronouncing my name so well. And great to be here straight from Miami, which is always hot, but specifically hot this week with Bitcoin Miami 22 happening. Thank you so much. So to your question, I think, look, in capital markets, in crypto, we're in the business of looking for signals. And I think there are some very clear signals coming both from Yellen's speech and from the White House executive order about a month and a half ago. And in general, that signal is crypto is here to stay. It's an important part of the financial of the future of the financial system, and it needs to be figured out. How can it be regulated in a constructive way that protects users? That's one key signal. At the same time, there's also a very strong signal, if you can call that first signal, the carrot. At the same time, there's also a very strong signal constantly coming out of the SEC with Chair Gensler warning against concerns, calling the industry still a Wild West, which I disagree with, but he does express a very clear concern with, things like you just discussed with Alexander, which are unfortunate, but also a natural part of a new ecosystem. In regards to Yellen's speech, I think that's the most important takeaway. I agree with Nick that there's an element of let's hurry and wait, but there's no question about the direction based on all of these signals. And the direction is a regulatory clarity that can promote this innovation as much as possible while protecting investors and users. And that's great for the industry.
Yellen wants to make cryptocurrencies, she expressed, subject to regulation on the same level as the traditional financial market. Is that compatible given the innovation and decentralized nature of crypto? I'd like you to weigh in on that.
I think the real question here is about pragmatics, right? What can be done in order to, as soon as possible, provide the necessary regulatory framework. And then there's also the question of what can be done in the longer run. In my conversations with regulators, I usually, I kind of stopped asking what should the industry do, and I started asking what can the industry do to help. And one thing that I've been hearing consistently is that it is possible that the best way to address crypto assets is tailored, specific regulation, new tailored agencies, as some of the proposals that have been put out by the industry suggested. It's possible that that's the best option, but even if that happens, that's going to take years. And in the meantime, one of the best things the industry can do is understand how can we fit under existing regulation. And there's some really, or a lot of the regulation in the United States is principle-based, right? It's not rule-based, meaning that you can actually look at the Commodities Exchange, at the Securities Exchange Act, look at the different principles that are introduced in it and reinterpret them and then explain to regulators how does the services we do fall under that. And we do see really interesting proposals coming out of that. And the coalition you mentioned, of course, part of our goal is to bring together, so many people in the industry. There's such an immense and compelling commitment to promote integrity. I think it really came through in your interview with Alexander, just a few minutes ago, that there's so much potential here. And we're all so excited about the opportunities to make finance more accessible, to bring in more people into the fold. But all of this potential will not be fulfilled if we don't mitigate the risks and we don't work with regulators. That's part of the coalition that I'm happy to speak to if you want to go there next, that we offered. But so there's just this immense commitment that we, and we need to work with regulators. And one of the best ways to do that is also understand how we fit within existing regulation while also thinking about adaptation of existing regulation.
Well, I guess that's what I was trying to get at is that, and you mentioned some new set of regulations, which would be interesting because a lot of folks talk about the Howey test, for example, and how it determines whether or not something is a security. But it was, passed in the 1930s. So it's a 90-year-old law. And does the current legal system need to be updated to address a whole new technological innovation that wasn't even conceived or imagined back then? But you mentioned the Crypto Market Integrity Coalition. So perhaps you could talk a bit about that, some of your goals and why you feel it's necessary to have this coalition.
Absolutely. Just to say, I 100% agree with you regarding the Howey test in general. I get to speak in forums that are relatively skeptical quite often about crypto. And one of the things I say is whether we'll all be paying each other with Bitcoin in 5 to 10 years, each of us can choose their opinion. There's no question that crypto is driving a critical reconsideration of elements of the financial ecosystem that have been stagnant. We still, measure what a security is based on the Howey test from the 1940s. We still use primarily SWIFT for international transactions. That's from the 1970s. So just to say first, I completely agree with you. And it's a really, really important value that crypto is bringing to finance, regardless of where you stand on it. Regarding CIMIC, the Crypto Market Integrity Coalition, at the end of the day, it's a gap that our firm, Solidus, has identified in terms of what the industry can do in order to push the industry forward and promote safe and regulated crypto opportunities to drive crypto growth and adoption, right? I mentioned earlier that there's really an immense effort in the industry to advance integrity, an immense commitment. We see it in our day-to-day all the time. A lot of the market surveillance teams that we work with in crypto are bigger than market surveillance teams in some of the largest traditional institutions, right? Now, CIMIC, which is led by our Vice President for Regulatory Affairs, Kathy Kraninger, who used to be the director of the Consumer Finance Protection Bureau. So she really understands, how regulators think. At the end of the day, first and foremost, an opportunity to unify leading members of the industry and anyone who is committed to market integrity as signatories of a pledge of commitment to preventing market manipulation and addressing those sort of concerns. We announced it back in February with 16 partners, including Coinbase, Circle, Anchorage, some really great companies, also including some of the biggest industry membership organizations like the Chamber of Digital Commerce and Global Digital Finance, basically to say crypto is not what it was 3 years ago. This commitment to integrity is bearing fruit, and today it's a much safer place than in many places. And you alluded to it earlier, Christine. On the centralized side, there are many places where the standards are almost as high, sometimes higher than in traditional finance when it comes to dealing with these concerns and preventing manipulation and abuse. And of course, the second piece of that message is, that being said, we do understand when we reckon there are still issues, and we are not only committed but excited to work with regulators in order to address them. And I'll just mention that this week, part of the reason we're talking about is there was another announcement of 13 additional members, signatories, bringing the number to 30, including Robinhood and Gemini, some Bitpanda, some of the biggest platforms, as well as up-and-coming companies like Simbridge, which is very institutional oriented. So very, very exciting to see this growth. It allows us more reach, more expertise.
Some big names there, but I'm wondering, what is your first initiative that would be key to proceeding forward?
So first and foremost, a big part of the early stages of CIMIC, of the Crypto Market Integrity Coalition, was really in that statement, which it needed to be said, that crypto is a safe place, much safer than it was 3 years ago, definitely on the centralized side. And second, that we are committed to working with regulators and excited to work with regulators to and the public and institutions and basically all stakeholders to promote integrity. Now, as you know, we were very, very excited by the response, and now comes the question, of course, of what next. Bringing together all of this expertise and crowdsourcing all of these incredible industry leaders, we're working in various threads, including various opportunities to share insights. You know, oftentimes when something bad happens in one place, there's a lot of possibilities to learn about it everywhere else in the industry. So that's a big potential course. Another one is developing, based on those insights, various training programs specifically for market manipulation in crypto. At the end of the day, part of the challenge that these are different markets and abuse, fraud, manipulation can take place in them very differently. That's what we deal with on our day-to-day at Solidus. And a lot of our partners who joined the coalition also deal with. And so developing tangible training and ways to practice and better understand what's going on. And then finally, in the longer run, I'm sorry, I'll just finish really quickly. Apologies, Christine. Obviously, also working with regulators to bring forward various frameworks that can deal with some of those challenges.